What's up, guys? Woods here again. It's going to be part 2 of my supply lesson plan. This is going to be playing order blocks after a supply zone has been invalidated. So just like demand order block lessons that I posted, make sure you go watch back those if you haven't. This is going to be on the supply end, right? So I just want to explain everything on both ends so that you guys can understand how to play it both ways. So right here, we get a 4-hour supply. This is the most recent example of it that I can show you guys, and you can see how I played accordingly on the long side. So we have a beautiful supply zone print, right? You would assume that's a beautiful supply zone. But when price came up, if you were playing the supply zone, we closed within the supply zone and impulse directly after that. So if you were playing the supply zone, you either had minimal opportunity to close it at no loss. If you were sleeping, you took the loss if you're playing this, obviously. You could have closed it, minimal time to close it off of a manual trigger. But then after the closure over and the invalidation of it, you're then looking at this zone as a flip level. So now you're looking at this as an order block. So when price comes back to, you're going to look to long. Look how beautiful this level comes back. Retest for a long. I love these examples because they're so clear to see. They're a level to bid and they're so just clear. This is a perfect example of a supply zone invalidating, flipping to an order block. Just a beautiful example. How I look at order blocks for on the supply and demand side is the invalidation gets a little bit tricky because when it becomes volatile, it can slice through. This one was very controlled and very easy to play. But in certain instances, you might be wanting to play manual stops, depending on how loose the zone is. You would play it almost exactly how you would play your supply zones. What I mean by that, you would manage the order block, you would measure it, I should say, the order block, and you would put your long tool down at equal or double the size of your phone. And this one, you can play a very tight invalidation, so 1.5%. I mean, just look how beautiful this example played out. It played out a few different times. So 1 time, 2 time, 3 time until it actually played out beautifully. But you could see just how perfect this example is of a previous supply that was invalidated. So even though you would have taken a loss on this play, you're looking at this like, okay, now I'm looking to bid this zone when it comes back for a long. Picture perfect example. So just like what I said in the last examples with demand, guys, after a demand is invalidated and sliced through, you want to treat that level as an order block. So it's going to be a level of interest. So just like you would treat support and resistance, where if support's tested, it's a level of interest. You want to see how price develops around that level. When resistance is tested, the same, you want to put in the same effort, evaluating that zone for when it's tested to see how price action develops around it. And I'm going to show you how that reacts around these supply zones. So let's just say around, I'll look for a random supply example to show you guys how it reacted. Right here, we got a big 4-hour supply zone printed here, right? So you want to take the wick down to the wick high. We have a beautiful supply zone right there printed. Yeah, perfect. So the price rejects, comes up, retested the supply zone, and rejects right after. Beautiful. So that supply zone acted accordingly. Perfect. Okay. So what happens when the supply zone tests a little bit more? Because generally, you want to play it like support resistance. The more times supply is tested, the least likely it is to hold, more likely it is to break. The more times demand is tested, the least likely it is to hold, more likely it is to break. Like support resistance. More times support is tested, the least likely it is to hold, more likely it is to break. Just like when resistance is tested, the more likely it is to hold, more likely it is to break. You want to look at supply the same way. You don't want to keep playing supplies and demands the more time, but you could play it depending on your risk. So the one time it's tested, immediate rejection. Beautiful. Perfect. Now, when it comes back to tests like this and it consolidates right under, you don't generally want to be too heavy in a short right here, but you can be playing it like that depending on the triggers you see. And you can see right here we had a beautiful sweep and close below. So it just kept closing below the supply zone. That's a good sign to say maybe you want to keep shorting it. And then even the flip down, you can short that. When it comes back up again with a macro higher time, or I would say a more higher time frame, higher low here, you want to look at this supply zone as more like a flip level. So rather than look to short it, you want to more or less look to play a long on the flip. Playing along here is more risky, but you can play it. Playing a flip here is less risky because now you can say, okay, previous we were able to reject multiple times out of the supply zone, whereas when the flip comes to, you can treat this as a good flip zone. So when people say, looking for level to flip, this is what they're referring to. Whatever confluence they can say. I'm not saying that they're looking at the specific supply zone. They might be looking at a low. They might be looking at a range flip, whatever the flip is. This is a good point of reference to play for when a flip happens. And this is where you would be looking for a flip of a previous supply zone flipping into an order block. All right, guys. So I'm just gonna kind of scroll through the chart now because you already understand the concept of demand, right? You should. And now you understand the concept of supply after looking at that last example. So what I'm doing is I'm just gonna scroll through the chart and show you guys examples of supply. Let's say a supply doesn't work out, right? So not every time is the supply is gonna work out accordingly. So let's say like right here, you got a move down straight through your demand zone. So it's sliced straight through your demand zone right here, right? The demand zone did not work. Now you're looking at this and you're saying, okay, now I got supply. So I know to put my bids within the supply zone when it comes back to test. Right. So now you see how we come back up, we almost retest, we come back down, and now we're going to look to flip it. So as soon as we get candle closures within the supply zone with a flip back down and higher or low within the price, now we're looking to flip it. This to me is a good reaction to say maybe I shouldn't be looking for a short as much in the supply zone. Even though it is a supply zone, it might work. You can see right here the reaction that's coming from it. You'll eventually have profit right here on this rejection, but then it'll look to flip back up with a higher low. Look for triggers to get out of that supply trade, or maybe look for a flip to long it. So this would be a good example of a supply zone that slices through and then flips into an order block here, right? So you can look at this now as an order block. So you see right here where we get this initial push in, right? And I said that higher low is a good trigger to maybe say, let me get out of that play, right? This is on the higher time frame. This is the 4 hour. If you're in this trade and 3, 4, 5 4 hour candles begin to trade within that supply zone, maybe it's a good sign to get out of that play, right? We have the previous range high right here, that previously acted as resistance looking to flip. We're consolidating directly under the supply, printing a higher low. It's a good sign to manually close the trade, maybe take a little bit of profit you came from it, or break even or slight loss, whatever the case may be. Before you take that loss, it's okay to take a loss. It's not a bad thing to take a loss if you're playing your trades accordingly. But when you see signs to get out of a trade, just like when you see signs to get into a trade, when you see signs to get out of a trade, get out of that trade, right? So it's the same concept when you're looking for triggers to get in that trade. Opposite way, you're looking to get out of that trade. This is a good example of a supply zone. It didn't play out accordingly. You just close the trade, no loss, and then after the flip back up and the close over, you now know, okay, when it comes back up, I'm looking for a long within that zone that I was looking to short. That previous supply is now acting as an order block, trade for a long, just like the OB examples I explained in the demand lessons. Just like what I said in the last examples with demand, guys, after a demand is invalidated and sliced through, you want to treat that level as an order block. So it's going to be a level of interest. So just like you would treat support and resistance, where if support's tested, it's a level of interest. You want to see how price develops around that level. When resistance is tested, the same. You want to put in the same effort, evaluating that zone for when it's tested to see how price action develops around it. And I'm going to show you how that reacts around these supply zones. So let's just say around, I look for a random supply example to show you guys how it reacted. I'm actually pull the replay button after this one. This is just a very minuscule example, just to show you how you guys could play it on the long side. So again, we have a supply print here. Now we're looking to technically take a short there, right? But we know that price is going to slice through that level, obviously. So we're going to be looking to take a long here when price comes back. Just as I explained, and a supply is sliced through, you then want to treat it according to how you evaluate price to go. When price comes back to, if you're not looking to short, you're looking to take a long here. Picture perfect example of an order block flip. And then again, when price comes to, again, printing in a lower high, not taking out this high, coming back into the supply, slicing through, retesting, what are you going to do? In this instance, you could look to take a short or long, depending on your trigger. I would say more or less on the short side, because then you have supply build up here. So you got to assume that maybe this previous level of supply that is now treated as an order block, we took a long, didn't technically pay that much, came to again, printed that higher low with the lower high, rejecting through, slicing through our order block and printing supply above it. This is probably going to be another short level. And after a little bit of choppiness, testing that supply that we pointed out, it eventually flips down, rejects, and acts accordingly. And again, came up, chopped around a little bit, acted accordingly. So All that to say, after a supply or demand is sliced through, it's a good level to look at for reactions in the future. It's a good point of reference. When charting and trading, you always want to have a good point of reference. People can look at their point of reference however they want to. There's multiple ways to do it. There's POCs, there's VWAPs, there's order blocks like I'm explaining, there's supply demand. Whatever you're looking at and however you're playing the market is how you do it the Monday range. Whatever it is, that's your point of reference. This is a good way to create your own point of references and evaluating how to play them depending on your directional bias at that time. So right here, we got a beautiful example, in my opinion, right here. Beautiful. We got that supply print, and we're going to just draw it straight throughout the whole chart. Let's say you don't have anything on your chart and you want to play a point of reference. This is your point of reference. Whenever price comes to, it acts choppy for a reason. So you're just going to want to tie in your directional bias with how you see the market going and playing it according to GMT. So initially, you would look at this as a short, right? Comes up, and now it just acts choppy around that level. So now it's an invalidated supply zone. But then it comes down below, and then it comes back in, and then it comes down, prints a higher low. Then it looks to flip. Then it chops, consolidates before what? You're going to draw your trend, right? So now you got to have a directional bias within the supply. If we're printing higher lows and we're looking to go higher, you should look for a long because price is compressing to make a move somewhere. So where's it going to go? Most likely up on this flip. And you can see flipped up for 6.6% respectively before coming down, coming a little bit below, deviating it a bit. Tricking people saying that maybe it's going to go below it and look to flip, go short, and then it flips it up again before going higher, printing another higher low in the price. This is a perfect example of catching a flip of the OB of a previous supply zone, utilizing it just as your point of reference to catch a play. Not having to really do much, not having to draw anything, just having to have a directional bias and your previous supply zone that's invalidated and get accordingly. And then again, when price came back down, it stopped, printed supply, then dropped. Came back up, tested the supply in the OB before dropping. This is a good example of an area to go short within your supply zone, utilizing that zone as a point of reference. And then one more time, came up, faked out people assuming that it was going to flip, looking like demand was going to print below it, and then just rejecting down below. Printing supply along the way. Printing supply along the way. And that's how I utilize supply zones as order blocks after they flip as a good point of reference. You can do this with demand zones or supply zones. Make sure you look back at my demand order block lesson to see how I would play demand zones just to get a good feel of it. But this is how I would do it, fam. If you have any questions, make sure to leave it in the comment section down below. Make sure to like, share, and subscribe if you're not already subscribed. Make sure to, if you want to support my links down below, make sure you do that, as well as follow my Twitter down below as well if you're already not. Until the next one, guys. Peace. Was out.